So let's talk about Amazon. Amazon used to be, at least a year ago, a $170 stock. It's down 40% in a year, down below 100. So this is getting interesting. So the question is this attractive below $100? It's an important question. And I want to show you Amazon's challenges, or rather problems, for this upcoming year because there's a lot of them. Now let's go back to classic view and let's scroll down to the Amazon MVP cards. This is on stock MVP. Obviously, we have a new trial, 7 days, free. Try it out, play around with it, go crazy. Grandpa loves it. You probably will as well. No credit cards or nothing. Just check it out for yourself. Let's look at the cards for Amazon. So here come the problems. So Amazon grew revenue by 9.5%, which is pretty standard for them. Now, look at where the problems start for Amazon. And here's where it gets dicey. 30% increase, rather almost 31% increase in SG&A. So expenses on the back office side starting to ramp up. 31% increase in costs in 1 year. Now, if you go to operating expenses, this is where it really gets dicey. Look at this. 400% increase in operating expenses in a single year. Now, unless this is a glitch, that's a lot. Look at net income. Net income is down 108%. EBITDA down 48%. Free cash flow down 14, almost 15%. Look at this. It's absolutely insane. Now, it has debt of $140 billion, which is more than double than the cash it holds, which is another balance sheet kind of conundrum, if I may. Balance sheet on the assets versus liability side is okay. But I mean, Amazon has a lot of issues. Now, if you go to our built-in stock MVP DCF calculator and just play around with it a little bit, look, let's give it 10% EBITDA growth, 5% depreciation amortization growth, 5% capex growth based on normal capex, not the spike they had in the past year. Let's do calculate based on 4% long-term growth and 10% discount rate, which actually we should use 12 in this environment. So $61 DCF value. Now, if you actually give it a little bit more oomph, let's say we give it 20%, double the growth that it has right now, then it is a $120 stock, $125 stock, which means it has about 27%. So that range, let's go to 15%. It's right there, just slightly under the current price. So actually overvalued by 7%. So it's currently trading based on the assumption that it's going to present a 15% revenue growth with the current fundamentals, which is above what it grew last year. I think with the current issues that you can see here on these quick cards that I've made for myself, you can customize it based on your own preference. Cost structure is absolutely a nightmare. Net income is down. EBITDA is down. Amazon has a lot of issues. And they're still the top dog in cloud. But I mean, Microsoft is up their neck. Google's up their neck. I don't know. Amazon really scares me. I think there's better options out there. It might spike. I don't know what's going to do in the short term, but they have a lot of challenges to work out. And I just want to come out here and show you what's going on underneath the hood, beyond the shiny paint. Hope that helpful. See you in the next video.